and 1. So I call this February 23rd, 2021 virtual meeting of the Board of Finance to order. Approval of minutes. I move to approve the November 10, 2020 Board of Finance meeting minutes. Do I have a second?
Second.
Commissioner O'Malley seconds. All in favor say aye. Aye. Madam Clerk, please call the roll.
Oops. Commissioner Barboa.
Aye.
Commissioner Benson. I can't hear. Is it me or?
I can hear you, Madam Clerk.
Okay. No, I can't hear them, Julie. I can see them. Just raise your hand. Okay, thanks, Adrian. Commissioner Benson. Commissioner O'Malley.
Aye.
Commissioner Casada is excused. Madam Chair Piscotti.
Aye.
Thank you. Now I can hear you. Thank you.
Thank you. And so moving on to the presentation, the County Treasurer will make a presentation to the Board of Finance with the report of February 23rd, 2021. Treasurer Nancy Burse, take it away. Unmute yourself so we can hear you.
Thank you. Good afternoon, Madam Chair and members of the Board of Finance. It's great to be with you. My name is Nancy Burse. I'm the Bernalillo County Treasurer. I'll be reporting today on the quarter ending December 31st of 2020. Next slide. And here's the agenda that we have on this presentation. It hasn't changed very much. You'll see that there's a little bit more slides, pages 1 through 3 on property collections, as we do have some updated information and an updated report to show you, and we'd appreciate any feedback you have. And then all the other things that we go through. Next slide. First up is the property tax collections for the first half of the 2020 taxes. So you'll see on this chart, it always bothered me that we reported the current year on the bottom. So I have flipped this chart. So now it reads from 2020 to 2019 to 2018. So don't let that throw you. Only because I think it's popular to see the current year first and to know what we've been working on. And you can see there for the first half, I was charged with $756 million to collect. We've collected $422 million. So we're just over half, which is right on, because again, this was only the first half of 2020 collections. And then you'll see 2019 and 2018 as we continue to collect for that. I have added some bullets there just to remind you on the bottom that after 2 years and before 3 years, property taxes that aren't paid and are considered delinquent, we do transfer that real property to the state tax and rev for collections. We keep the personal property and manufactured home delinquent collections. That stays with the county. And again, tax collections are limited to 10 years. There's a 10-year tax roll that we collect on. After 10 years, delinquent taxes by statute are presumed to be paid, and they fall off, and I put that in quotes, that's my technical term, they fall off the tax roll. Next slide. And here's our property tax collections. Again, there's the 10 years from 2011 to 2020. And you can see that we do a great job collecting. Most of them are over 99% of the taxes are collected. And again, we like to do that and try and keep as much in the county before we turn it over to the state as possible. I do want to call the bottom out 2020. We have collected for this first half 55.78% of the taxes. So we're really over 50%. And that's fantastic. And that was as of December. I think now we're currently sitting around 58, 59% because more has come in. Also, I want to call your attention to 2019. There's 2 rates there, and that's because, remember, 2019 is that tax year, the second half, that our special legislative session extended legislatively to be paid until May of 2020, this May. So I wanted to show you that as of June last year, we were at 96.84%, and that's the one in parentheses, and we've collected 1.3%, 31.31% more, which doesn't sound like a lot, but when we added up the dollars, it was just over $10 million. So we continue to collect for that 2019 second half, and that's really contributing also to our liquidity. Next slide. Here's where we're putting in some pictures for you, and it's called dashboarding. So you can see things at a glance, and there's not a lot of Excel spreadsheets. It's very intuitive to read. I don't know if it is on a Zoom call, but when you have the papers in front of you, I think it is. So at the top left, we have the call volume for the months October, November, December, and I compare the orange, which is 2020, to the previous year. And you see our call volume is about the same. You know it always spikes in November or December, and you can see that clearly here on the chart. We even jumped up to over 8,000 calls in December in 2020. So people were really calling us. Of course, we had COVID. The office remained closed. So there were a lot of questions about how to continue paying. Where do I pay? All those questions. Then there's also the delinquent account turnover to the state. We've been collecting a lot of data on that. Because again, we think it's important to try and collect on delinquent accounts and minimize how many properties are turned over to the state. Because for us, that means people are staying in their homes. They're able to not be afraid of the state auctioning their property. And we don't want that. We want them in their homes, being able to work, provide for their families, and be good taxpayers. So we saw in 2019, that's when we had our 10-year low. We really worked hard on that. Of only 427 properties that year were turned over to the state. You can see, however, in 2020, with the impact of COVID, jumping up to 750, it was very difficult to start collecting. The state has backed off of doing any auctions this year, or as long as the COVID mandate is in place. So that's not going on. So we just are talking to people about collecting, whether it's $20 a month, $50 a month, whatever their economic situation dictates. Then the delinquent collections, you see again, the types of collections, which is mobile homes in the green, personal property, which is business equipment in the gray, and real property in the blue. The navy blue is a total of all 3 for that month. And again, I compared it for 2019 to 2020. You'll see the big spike in 2019. You see where real properties were really impacted. Again, we think that was because of COVID. Horrible unemployment going on in our county, and really no way to collect it at that point. So that's kind of the dashboards we're giving you. We also have some pie charts and other things that we'll be incorporating this whole year. So we encourage you to give us some feedback if you like it or if you don't like it. But we've been working on collecting this data for about 2 years so that we can start reporting out to you what the operations are in the office. Next slide. And I'm going to turn it over to Deputy Treasurer Scott.
Yay. Thank you. Yes, thank you, Madam Treasurer. My name is Kenneth Scott, Deputy Treasurer, and I'm going to take it from here. First things first, though, allow me to welcome Commissioner Barboa and Commissioner Benson. I'm really excited to work with you both and get to know you both. As I've mentioned in the past, if you guys have any questions, please use our office as a resource. We're here to help you. So my first slide is probably one of the more important slides that I talk about. It's the bank balances and collateral. Remember, we always talk about safety, liquidity, and yield in that order, and this speaks directly to safety. The other thing you need to understand about this slide before I go into it too much is it's a snapshot in time. So it is literally the bank balances and collateral as of December 31st, 2020. Those balances have changed. One way you can tell that, though, is about the collateral with Wells Fargo. So Wells Fargo is required from the State Treasurer's Office to keep 50% collateralized pledge collateral to us for our balances. As you can see on this slide, they actually, as of December 31st, 2020, they actually had 176 million in pledged collateral, even though we only had 58 million at the bank at that time. And that's because we had those higher balances as we started the property tax collection. So as we start getting that property tax collection, they have to pledge collateral when we keep that balances in the bank. When it comes to Main Bank and Bank of the West, those are our two ICS insured cash sweep accounts. So we break that huge chunk up into $250,000 increments and spread it across the different banks. And so those balances actually have the full FDIC coverage. So we don't have any uncollateralized balances there. And then finally, the Bank of America repurchase agreement balances. To be perfectly honest, and I think I've told this to both of you as a sidebar, these are strictly held because of our debt defeasance from our old bond series back in 1997. So in a way, we have to hold these balances, but their collateralized is a lot higher, it's at 105%. But we wouldn't sell them anyway because we get a healthy 6% on those repurchase agreements, quite frankly, and you will not find that anywhere else. So this slide is our operating portfolio breakdown. Usually I sort of skim over this, but for our newer members, I'm gonna take a little bit more time. I hope, Madam Chair, you don't mind, you take a little bit more time with this one. But this is basically our 3-bucket strategy. So it really outlines what we do here at the county as far as our investments is concerned and how we sort of break them down. So in those first 2 buckets, I consider those the liquidity component. You have 15% of the operating funds that must mature within 30 days. That's our highly liquid bucket. And think of it, I think Madam Treasurer always explains this perfectly when she says this is like, bills that you have coming in and out every month, right? You have to have that money set aside to make sure you make, say, payroll and that kind of thing. Then you have the liquidity ladder, which is a smooth ladder of 5 million. 60 million must mature within a year. That just goes out just in case we have excess need of funds. So right now we have it actually laddered out to 26 months. And there are some things that we're thinking of changing there. But that's just, consider that sort of an extra bucket of liquidity just in case we need extra money. And then finally, we have the core portfolio, which is the DFA 3/12 reserve plus the 5% of the county general fund that is actively managed by public trust so that they can try to take advantage of any kind of opportunities they might see in the market. But that money is money that we should never need. And currently that's 112 million. I'm going to go into a little bit more detail with those funds here in a second, and so will Ash. But I'm going to stop there just in case, especially our 2 new members, if you had any questions for me before I move on. Seeing none, I'm going to continue on. So this is the operating fund summary. Again, keep in mind, this is a snapshot in time. So this is basically a breakdown of all the money that we have, both in our highly liquid buckets, but also in our liquidity ladder. And one thing that I want to point your attention to is the Treasury and Agency Securities, which is the third line from the bottom, or is 2 up from the total. It has a par amount of 339 million. That's a lot. That's really high for that amount for the liquidity ladder. That's basically what's in the liquidity ladder. But the reason for that amount is, remember what I said, we were collecting property tax payments. So every year when we collect our property tax payments, we buy a short-term security to sort of lock in a rate that we can get, so we can make as much as we can. Not nearly making as much as we used to, I'm sad to say, but we still do it in a very safe and efficient manner. And so 221 million out of that bucket has already went out, because that's what we distributed to our partners. And then of course the other stuff that I've already talked about, the 94 million that's in Bank of the West. And we have 89 million that's in the local government investment pool, which is a pool that is run by the state treasurer's office. Moving on. This is the core portfolio. As I always say, I'm not going to steal Ash's thunder. Can't do that even if I tried. But they manage this money actively to try to get as much as we can. Again, this is that reserve amount that we shouldn't need anytime soon. And currently that balance is at 112 million. We do have a little bit more wiggle room that we could add a little bit more to that. This body previously raised the ceiling up to 140, but again, I'll let Ash go into a lot of that. Bond proceeds portfolio. So this is actually important as well. So this is completely separate from those other 3 buckets that I was telling you about before. The bucket, these funds are managed strictly to a draw schedule. So we work really closely with finance and all the departments around the county. And so when they have capital projects and they know they might need, say, 5 or 7 million in a certain month, we make sure we buy securities so that it matures in that month so that they can have that money. So we're not looking for yield when it comes to this portfolio. It's strictly managed to a draw schedule. Any excess yield that we do get, we just put right back into those projects. And then finally, this is what I used to call my favorite slide. It still is. I'm going to say it still is. It's just not as happy as it was in the past. And it's basically the net investment income by quarter. It's what we've made as a combine of all the different portfolios and buckets. This quarter we made 1.6 million, a little bit under 1.6 million, which is about a 9% or so, math in my head real quick, increase over the previous quarter, but a 27%-ish decrease over the same period in the second quarter. And what that really speaks to is the type of market that we're in. Again, before, if you're looking at fiscal year 2019 and even the early year of fiscal year 2020, we were getting a lot higher rates on the front end of the curve that we're just not seeing anymore. Just sort of to give you sort of a context, a year ago this time, it was nothing for us to get 2% on our short-term securities or 30 days. Now it's 0.07%, so it's 7 basis points, and I'm happy to get that now, right? So that's just sort of the different markets, and so you can kind of see that as you go on. So from there, any questions before I move on to Ash and turn over to him so that he can do the public trust report?
Commissioner Barboa, I can't see you on my screen, but would you like to make your comment?
Oh, no, I just was saying that at least we're not at a loss, and good work, Mr. Scott and Treasurer Burst's team.
Exactly. That's not what we're not going to be at a loss. Safety, liquidity, yield, always in that order. Thank you for saying that. Okay, Ash, I'm going to pull up your report and then we can go from there. Let's see here. Where is yours? There we go. And I can run it for you, Ash.
Thank you, Ken. Good afternoon, commissioners, and thank you for having me. I know a lot of you guys have seen this before, and Ken has kind of reviewed it, so I'll move it over pretty quickly with just a few notes on each slide to move forward. So Ken, if you can move over to slide 4.
4? Oh no, wait, sorry. I'm sorry. One second here.
Not a problem.
One second. Is it moving over? Yeah, I can't really tell.
There we go. Okay, we're there. So again, kind of to reiterate what Ken had said, bucket one, which is what the treasurer's office runs, and we are working with them to possibly reduce a little bit of excess liquidity in the highly liquid bucket, which would be moved over to the core portfolio, which Ken kind of mentioned. We've been trying to develop a strategy and figure out where the money is going to be coming from. So that's a work in progress, but we are moving to reduce some of the excess liquidity that you have in the highly liquid bucket. As we talked about, bucket number 2 is a smooth ladder, which is what we call our liquid fund, our liquidity ladder. It's intended to be $5 million a month of liquidity for 12 months, so a minimum of 60 million. We have about 137 million in there right now, and the ladder goes out about 26 months. So we have a lot of liquidity in there as well, which bodes somewhat well and not somewhat well for the current interest rate environment. Those dollars have to be reinvested to a certain draw schedule, which will then give us shorter term maturities or longer term maturities, depending on the strategy for the liquidity ladder. Ken, can I have you move to snapshot the next slide? So this is kind of a graphical representation or less graphical representation of the accounts that Public Trust runs. Obviously, bucket number 1 is Madam Treasurer's bucket. And bucket number 2, we work with the Treasury Department to do this. Again, the 210 million, that was a 1-month investment for property taxes. That is not a balance that typically stays in bucket number 2. And I think the snapshot we reflected prior will, it's at 137 million now. So the 210 came back out. And bucket number 3, again, is the 112 ladder million that we would like to beef up to 140 if that's approved. And that is actually invested to a benchmark. So when new funds are put into that, it'll be invested along, into the portfolio. So it'll match the benchmark that we've selected, which is the 0 to 5 year Treasury. Next slide. This is also, Ken and I are working on putting together a more cohesive presentation, so we're not repeating the same slides numerous times, but this is just a different way of looking at the same slides that Ken had presented. We have the highly liquid bucket at the top, followed by the liquidity, again, showing that extra 210 million. When it shows 347 million, it's actually 137 million now. And then we have core portfolio that is actively managed there down at the bottom. Next slide, Ken. And again, because of the operating funds, very safe, very, all U.S. government, very minimal cash, because that's really what we can invest in to state statute in the liquidity portfolio. And we also do have the ability now to invest in commercial paper. However, yield spreads in commercial paper are really not beneficial at the current time. However, we are keeping our eye open to make sure that we do get some commercial paper in, due to all the, a lot of effort was put into updating the investment policy and getting the county up to date with that, so we can purchase commercial paper. So our goal is to get some in the portfolio in the next year. Next slide. This is a graphical representation again of the core portfolio. What you're seeing at the bottom left-hand corner is 75% US government. We do have some government-sponsored entities, which are like Fannie Mae and Freddie Mac, in the portfolio as well. That's a little bit about 16%. And then money market is about 9% right now. Next slide. We can go past this slide as well. So this is a interesting chart just to kind of look at, and what Ken was kind of talking about the yield curves, the current yield curves in the market. Right now, all short-term money is basically below, anything under a year is under 20 basis points. And it's probably even lower now than it was when this chart was put out. So basically our goal with the county is to protect the assets, protect the money. And if yield is able to be gained, that is a secondary objective. So safety, liquidity, yield. Next slide. Again, this is again the portfolio, about the core portfolio. The benchmark is the 0 to 5 year US Treasury index. So again, as new money is shifted over to the portfolio, if that decision is made, then it'll be invested along the curve to match the duration of the benchmark. So we're not going to go in and put it all 5 years out. We're not going to go in and put it 1 year out. It's going to be invested along the curve so that we do have, we stick to the benchmark target. All right, do I have any questions or should I continue? Commissioner Benson? No.
So no questions?
Commissioner Benson's on having some technical difficulty. Let me see if he's going to give me a signal to move on or. Okay, all right, we can move on.
Okay.
This is the portfolio performance. Again, we were last year we had the benefit of pushing some money out by applying to that new benchmark. So we did actually get some capital appreciation in the portfolio while the interest rates were dropping. So we protected the yield by investing out the curve for a couple 8 to 10 months. We protected the gains in the portfolio, which was very beneficial. If anyone has any questions on this, I'll be happy to take this offline. This is a busy slide, and I'd rather, if someone has questions on it, I'd rather talk to them offline here. Next slide, Ken. And what we did talk about the bond proceeds portfolio, this is also a portfolio that, again, is matched up directly to expenses. So on a month-to-month basis, we get together with the Finance Committee and Treasury Committee and work on seeing where money can be reinvested, what money has been spent. And then again, from what I understand, we have some new capital coming in April, which will then invest out to the draw schedule that comes in for those funds. Next slide, Ken. This is, again, a graphical representation. The money goes down every year and then gets replenished every year. So that's kind of what we're looking at here.
Nice.
Does anyone have any questions on this side? No. Okay, Ken, I think I'll pass it back to you here. And I believe it's Matt. Is it Madam Treasurer or is it you, Ken, that goes next?
Madam Treasurer, here, 1 second. I'll
Treasurer,
pull back
please
my
go ahead.
card. Hold on 1 second. Okay. You see the screen?
Perfect. Thank you, Ken.
Yeah.
So I wanted to also update you on some of the office news that's going on. First of all, we want to thank our new member, Commissioner Benson, who right away wanted to be on our investment committee, and he's attended his first committee already and has just jumped right in. So we really appreciate that and love the feedback and the conversation back and forth. The investment committee is an advisory committee, so having that robust conversation is really what it's all about. The new report format, you saw some of that on the operations side with the dashboards, the pictures. We know Public Trust had started this sometime last year with their client site. And I know I've been looking at it for 2 years or so with other state entities, the State Investment Council, PARA, the State Treasurer's Office as well. And if you serve on any financial boards, you see that a lot. That's been the coming trend. So I wanted to update our report to make it look as fancy as we can and as intuitive and easy to read as possible. Sometimes, that information isn't easy, but sometimes putting it in a picture makes it really pop. So as we move forward with that, we hope you give us your feedback on that. Merchant services has really taken off. That's the new online payment and some other software tools that we're getting for cashiering and being able to link up payments in a uniform way across county departments. So we're very excited about that. I don't know if Ken wanted to talk about that a little bit. Ken,
Sure.
did you want to say anything? I know you're intimately involved in this.
Yes, I'm really, really excited with everything that we're bringing to the county. Just better ways to pay for our constituents, but also a lot of efficiencies for the staff as well as we take different types of payments for different departments. Really, really jazzed with all the work that's going on. Currently, we're implementing the treasurer's office. In fact, we have a kickoff meeting for the online portion tomorrow. I'm really jazzed about. But things are moving along quite well. Just really great work effort between a lot of different departments, including IT. IT's done a lot of really great work. Robert Benavides, our CIO, but then other departments too. Ms. Megan Ellsworth, she's done some great work as well. So really excited to see what we're going to bring to the county. And I think a lot of constituents are going to be really, really happy with what they see.
Thank you, Ken. Next up is we were doing some scratching of why we had some money in our suspense accounts, and we found that as we dug deeper, we have about 90 parcels of property that seem to be involved in the tax lightning case. You remember that from way back 2010 or so. And the case went to the Court of Appeals and then also went up to the state Supreme Court. And what's missing on these cases was the final disposition, the court order on them. We just never got those back to be able to do something with that money. It was held in suspense because there was the lawsuits for the tax lightning, so we couldn't do anything with it. But now that's all been settled, so we really need to get that cleaned up and taken care of. So we've called in our I shouldn't say our visiting attorney, but our advisory attorney, David Chacon, and who's able to, access all those records. We did have the CV case numbers on them, so he was able to look them up. So just today we got the first batch of about 30 that the cases were suspended, and we can go ahead and distribute that money and get it back into the community and back to us as well, because we're part of those entities that get some of that money as well. So we're glad to do that. We think it'll take about 2 to 4 months to get that cleaned up. But certainly in this time of COVID, when we do need that money, this is a great time to do it. So we're just really excited that with the new fiscal year that we found it within the first 6 months here, and that we're on it. We're going to work through it. So you'll be hearing more updates about that. And then also lastly is our annual internal audit has started. We're an office that gets audited every year internally, and then on a rotating basis, every 3 to 4 years for the external audit. So we have the internal auditors in, they've received their information. It looks like it's going to be a routine audit, and we don't expect anything unusual or any findings. So we'll have that done in the next, I don't know, Kenny, month or two, you think?
Probably even sooner than that, maybe in the next few weeks or so, because we've already turned over all the documents to the auditors, so they're doing their field work now. And so I expect them to have a few questions as usual, but then it should be wrapped up pretty soon.
Okay, wonderful. So I think that concludes my report. What is the next slide? Just any questions? Yeah, and any discussion?
Commissioner Barboa has a question. Go ahead.
Thank you, Madam Chair and Madam Treasurer, and Ken and your team. I just heard you, well, earlier you talked about quarterly approval at the commission. So I'm really just trying to learn. I think that means that quarterly we review the portfolios and where.
That's correct, and that's the what you saw with Ken and Ash is the review of the portfolios, and I think it's actually, Madam Chair, the next agenda item where we get the advice and consent for our strategy. I just didn't know if you had any questions on the report itself or anything like that.
No, my other question, sorry, Madam Chair and Madam Treasurer, is just that when you say, if you don't mind just teaching me a little, that the annual internal audit happens and then every 3 or 4 years an external audit. Does the external internal just mean that it's made public, or what's the difference between internal and external audit?
That's a great question. Ken, did you want to try it, or I'm happy to answer it as well?
Sure. Well, so it's primarily the different auditing groups, right? So we have sort of our EDW is our internal auditing group that actually does a lot of the internal work for us. And then the external auditors is, I want to say Clifton Allen. I could be completely wrong, DC and Reagan, but
That's
they
right.
are
Clifton Lawson.
Clifton Lawson, yeah. They're a completely different firm that comes in and looks at our books from the outside. So that's the external auditors.
And the external auditors look at, I think it's rotating 3 or 4 departments or offices that they review, and that's all they review, and that alternates year after year, so that all the departments and offices do get a review. For us, because again, we're your banker, we're handling your money. We do an annual internal audit, make sure all of our policies are up to date, make sure that we're following them, and that we have the proper procedures that we say we have in place, and we're doing them. I'm sorry, DCM Reagan.
Yeah, I was, Madam Treasurer, I was just going to add to what you and Deputy Scott were saying. Commissioner Barboa, what the internal auditors, like I said, they audit our internal controls. And so we don't have an internal staff that does the auditing. So we hire a firm to do that for us. And they do an annual risk assessment. So that's where the rotation of departments comes in. So they assess what are the highest risks. They interview the commissioners, they interview the county manager, myself, department directors, and then they put, based on whatever the accounting policies say and the rules, they will put together a risk plan and a risk assessment and then audit departments based on that. They also collaborate. A lot of their work goes into the external audit, which is where we produce the CAFR. The two work together, and the external auditors, again, they coordinate with the state auditor's office as well. And so they review all of the financials. So even though, like Madam Treasurer said, she's on alternating years, her numbers still get reviewed because it's a part of the overall financial statements for the county. So that's how the two audit firms work together, and they report to the audit under the Board of County Commissioners. And then they coordinate their daily work and their audit findings through the accounting department with all of the other departments. So after each audit, if there's audit findings that we have to clear, they'll come back and do a specific audit of whatever didn't pass the year before. And that's one year why we got the audit award, and then from the New Mexico counties and the state auditor's office.
Thank you, everyone.
I just want to make one real quick comment. Sorry about the slideshow. It was, for whatever reason on my side, every time I tried to maximize it, it would jump to the old presentation. That's why I did that. But if you guys do need copies of the report, I'm happy to send it to you and go through it in more detail, specifically the PTA report, since I couldn't enlarge it. Just let me know.
Thank you.
I have a question.
Oh, great. Commissioner Benson.
Can you hear me now? Thank you. I've had IT signing on to fix my speakers. First, thank you, Madam Treasurer and Deputy Treasurer. Great presentation. And it's an honor also to be on the investment committee, and I look forward to it. One question that popped up, Mr. Scott, while you were presenting, you were talking about the ladder. And this is a question that just came to my mind I didn't think of when we were looking at this before. You've got excess funds, right? Your goal is to have 60 million and 5 million maturing every month. With the excess funds, are you just spreading it, dollar cost averaging, or are you hitting it bigger in one month if there's a bigger yield to dump those funds into, or are you just spreading it as you get it?
Well, first of all, you already kind of answered it. You already deduced that, so well done. So usually what we do is we have a few months that we actually like to double up. So like, for example, we know we get lean around September and October, so usually we'll have a little bit higher balances there. Same thing in March around this time. However, one thing that we've been looking at a lot, and one thing that Ash and I and Tim from finance, we've been doing a lot of great work. One thing that we're going to try to do is actually sort of change that framework a little bit, because you're right. So by policy, we have to have 60 million maturing within that year, right? And one thing that is good is that we've taken advantage of putting that money longer on the curve, which has really been beneficial in this kind of a market where you can't get anything else. That being said, going forward, one of the things that we're looking at is trying to push, and Ash kind of mentioned this too, but kind of trying to push some of that money a little bit out the curve so that we can really take advantage of public trust's expertise and have that better value for the county. So you're right. So we usually use that money to double up just in case we might have some liquidity issues. To be perfectly honest, though, now I think we're at a point where we are fairly confident that we can still have that liquidity, but also take advantage of longer rates when rates start to increase here. Hopefully in the next year. I hope I'm not saying the same thing in 2 years. But who knows, right? Who knows? I don't have a crystal ball. If I had a crystal ball, I would tell you guys. But we'll leave that up to public trust. They should have the crystal ball. But go ahead. I'm sorry. Did you have another question? A follow-up?
No, sir. That was it. Thank you.
Okay, great. Madam Treasurer, do you have more to say about the investment strategy, or is it time to take a vote?
If you're ready to move to that agenda item, I'd appreciate it. If we're ready, we're ready.
Okay. It looks like we don't have any more questions, so I will move to give advice and consent on the proposed quarterly investment strategy as outlined in the Board of Finance report. Do I have a second? Thank you, Commissioner Barboa. All in favor, say aye. Aye. And Madam Clerk, please call the roll.
Commissioner Barboa,
Aye.
Commissioner Benson,
Aye.
Commissioner O'Malley,
Aye.
Vice Chair Casada is excused. Madam Chair Piscotti.
Aye.
All righty.
Thank you very much. That passes unanimously. Our next Board of Finance meeting will be Tuesday, May 25th, 2021 at 4 p.m. via Zoom. And if there's no other business, this meeting is adjourned.
Thank you, Madam Chair. Thank you, Board.
At 5 o'clock. Take care.